Now, moving to the next section over here is section number 17. Please come to section number 17, everyone. Everyone over here. Section number 17 goes ahead and talks about apportionment of credit and block credit. Apportionment of credit and block credit. Section number 17 has 17.1 to section number 17.6. Let's go ahead and start with section number 17.1. Section number 17.1 says whenever goods, services or both are used by registered person, partly if he is using for business purpose, non-business purpose, he will get the credit relating to business purpose only. ठीक है sir. Section number 17.2, if you are going ahead and using something, means or input, that basically goods, services or both, for making taxable supply and exempt supply, you will get the credit relating to taxable supply including zero return supply, exempt supply credit you will not get. Sir, how much will I get? How much will I not get? Section number 17.6 told government will go ahead and prescribe the method, and government has prescribed rule number 42 and rule number 43. Now everyone over here, section number 72 may we section number 17.2 may we go ahead and take exempt supply. It means everyone listen. If I am doing taxable supply and exempt supply, if I am going ahead and doing taxable supply and exempt supply, then sir, I will get the credit. I will get the credit only relating to taxable supply. Exempt supply ka credit I will not get. It means if government is selling exempt supply normally means nil rated, wholly exempt, non-taxable supply, nil rated, wholly exempt and non-taxable supply. Now if exempt supply ka definition government increases, means I will get less credit, because more exempt supply means less credit, and hence government went ahead and told section number 17.3 may that sir, normally exempt supply ka definition whatever is there, sir, exempt supply means nil rated supply, exempt supply means wholly exempt supply means non-taxable supply, right everyone? But for the purpose of apportionment, government increase the scope of exempt supply, and hence if it is an exempt supply you will not get the credit. Now here government went ahead and told that exempt supply will include further supply under RCM. If I am going ahead and doing supply under RCM, I will not get any ITC. Sir, transaction in securities, if I am a person who has transaction in securities, 1% of the sale value shall be taken as the exempt supply ka value. Sale of land and completed building, stamp duty value, sale of land and completed building, there is no GST, so it will be considered as if it's a exempt supply only. Remember, nil rated, wholly exempt, non-taxable supply, and sir, supply is done under RCM. Always take the transaction value. Transaction in securities, take 1% of the sale value, sir. And supply of land and completed building, take the stamp duty value, and that will be the value of your exempt supply. Now government is going ahead and telling exempt supply, say you can go ahead and exclude, means these things are not to be considered as exempt supply, and government is telling over here these things are not to be considered as exempt supply basically. Sir, what are the things not to be considered as exempt supply? Baba, this is only for the purpose of apportionment. Government is telling interest income. Ramesh, if you have any interest, or basically whenever you are giving loans and advances and your whatever is received in return is interest or discount, then Baba, government is telling that income is not to be considered as exempt supply, although exempt supply, but don't consider it as exempt supply. But for banking companies, interest income will be considered as exempt supply. The next one over here is, sir, interest and discount income exclude. Exempt supply will always exclude interest and exempt income. Sorry, interest or discount wala income basically, that is to be considered as taxable, and it will not be considered as exempt supply. Then value of supply by way of transportation of goods by a vessel from custom station in India to outside India. Now it is anyways taxable supply. I hope you guys remember transportation may we have already gone ahead and spoken. It is anyways taxable supply to be considered as taxable supply. Here government have gone ahead and made one addition, and government have told value of supply of duty credit scrip. Baba, duty credit scrip also, duty credit scrip now to be not considered as exempt supply. It is not to be considered as exempt supply. Actually talking duty credit scrip which you get under SEIS scheme, sir, RODTP scheme, all these scheme ke under, sir, services export from India scheme, sir, RODTP scheme, all these are in your FTP. Okay everyone. Now under all those schemes you get duty credit script on that. Actually the rate of GST is nil, means it is an exempt supply, but government is saying please don't consider it as exempt supply, you can take it as your taxable supply only. I hope the point is clear. So sir, exempt supply means everyone nil rated, only exempt, non-taxable supply. RCM ka supply, transaction in securities 1%, sale of land and completed building also will be considered as exempt supply. Three things will not be considered as exempt supply: interest income, sir, transportation of goods by a vessel from custom station in India to outside India, and sir, the last one over here is, the last one is duty credit script ka supply. If you are going ahead and doing that, will not be considered as exempt supply. Everyone over here now. The next one over here is section number 17.4. What is section number 17.4? Going ahead and telling section number 17.4 read with rule number 38 applies to non-NBFC, sir, NBFC, then banking company and financial institution. Remember, it is applicable to NBFC, banking company and financial institution. And it says that if you are a person, basically you are a company who is basically engaged, you are a banking company, you are a financial institution, or you are an NBFC, then Baba, you will be given, who is basically engaged in extending loans and loans and advances, you will be given two options. Either you can go ahead and follow rule number 42 and 43, rule number 42 and 43, or the next option, everyone. What is the next option? Quickly tell me. The next option is every month. Every month, I'll tell you in shortcut so that you can remember. If you buy inputs, you can take 50% credit. Bank went ahead and told the government, sir, what to do? We have lot of interest income. Government told, okay, apply option number 1, that is apportionment, or you can go with option number 2, with which government is going ahead and telling that, sir, inputs you can take 50%, input services you can take 50% credit every month. Sir, if you buy capital goods, please take 50% credit. If you are going ahead and buying anything which is for non-business purpose, don't take the input tax credit. If you are buying anything on which credit is blocked, you will not get the input tax credit. Then sir, then the next one over here is, sir, if you are taking any input and input services from distinct person, you can take the 100% ITC. 100% ITC can be taken. That is what is being told over here. Remember, input service, capital goods 50%. Sir, non-business purpose you can't take the ITC. Block credit you can't take the ITC. And distinct person, say if you are taking input and input services, sir, you can go ahead and take 100% of the credit, and that is what is being told. Eligible ITC always 50% and remaining will lapse. Sir, this option once exercised, once you give the commitment 100 full year, you will have to go ahead and follow. Then sir, 50% restriction not applicable in case of distinct person. Rule number 38 goes ahead and says, sir, if you are buying anything for non-business purpose, don't take the credit. If block credit, don't take the credit. Sir, avail the credit of tax paid on input or input services received from distinct person. You can take input and input services received from distinct person. Say whatever is received, 100% credit, and remember always 50% of the ITC you can go ahead and take. Remaining 50% will lapse. So it says 50% of the remaining ITC shall remain ITC admissible with respect to input service, capital goods, and the balance of ITC you have to go ahead and reverse in your GSTR 3B. Everyone over here, sir, why have you written everything in green? Actually, I'll tell you, there is no amendment in this chart. One small point, only one small amendment, that exempt supply say you should exclude, means this will not be considered as exempt supply. Duty credit script ka value of supply. Okay, everyone. The next one is, sir, why rule number 38 also has been made green? Baba, actually rule number 38 mein some old references were there. GSTR 2 ka reference was there. Section number 42, 43, which has now been eliminated, that references were there. Those are being deleted. That's all. Section number 41 is now amended, and hence section number 41 ka reference also has been deleted from rule number 38. From exam point of view, Baba, only thing you can remember is duty credit script not to be considered as exempt supply, not to be considered as exempt supply for the purpose of apportionment. I hope point is 100% clear. We are done with section number 17.1, 17.2, 17.3, 17.4. Now listen to me very carefully. Sir, section number 17.1 talks about whenever something Whenever you go ahead and buy something, you use it for business purpose, non-business purpose, you get the credit only relating to business purpose, may whatever you have gone ahead and used. Sir, if you are going ahead and using something for taxable supply and exempt supply, you get the credit only relating to how much is relating to basically taxable supply, including zero rated supply. How much credit to take, how much not to take is told by rule number 42 and rule number 43. Let's go ahead and now learn rule number 42 and 43. Is everyone 100% clear to all? Yes, sir, we are all clear. Chalo, let's go ahead. If you guys are enjoying the video, you will have to go ahead and give me a quick like so that I know that people are liking the video. Let's go ahead. Everyone over here now. Now, please come to rule number 42 and rule number 43. Everyone over here, rule number 42 and rule number 43. Input tax credit में section number 17, everyone. Input tax credit, we are there in section number 17. We are going to now learn about the apportionment. Everyone, when we go ahead and talk about the method of apportionment, we have rule number 42, which goes ahead and talks about input and input services ka apportionment. Rule number 43 talks about capital goods ka apportionment. Everyone over here. Rule number 42, let's go ahead and understand. Sir, I went ahead. Everyone over here. Sir, I went ahead and bought some input. Okay, I went to my client. My client went ahead and gave me these invoices. Now, in these invoices, he is going ahead and telling Ramesh, you see what are the credits you can take. Everyone, you see what are the credits you can take. So, what I will do, I will go ahead and take all these invoices. And first, I will write the total credit, right, everyone? In these invoices, the total credit supposingly is 10,000 rupees ka total credit. First of all, I will go ahead and say, oh, sir, what personal bills you are keeping in this? Personal bill out. So, sir, thief number 1, personal purpose related ITC out. 1,000 rupees ka ITC is out. ठीक है. Then, sir, what is this? Exempt supply ka credit you will not get out. So, sir, thief number 2, exempt supply related 1,000 rupees ka credit out. Sir, what? The next one, arey biryani bill, sir, your biryani bill and all, you will not get the credit out. Sir, thief number 3, sir, block credit 1,000 rupees, you will not get the credit. So first, personal purpose out, exempt supply out, then sir, block credit out, and you have 7,000 rupees ka credit remaining. This is known as, everyone, this is known as credit C1. We call it credit. Credit means C1. Okay. Now out of this, sir, this too is for your taxable supply. Everyone listen. 7,000 ka credit ITC you can take in your e-credit ledger. Okay, sir. The next one over here is, sir, this one. What is this? This is for your taxable supply. You can take the credit. Sir, this one. What is this, sir? This is relating to your taxable supply. You can take the credit. Okay. So taxable supply related, whatever is there relating to exclusively taxable supply, I will take the credit. For an example, it is 2,000 rupees. Anyway, 7,000 ka credit I have already taken. So now out of this, I am trying to find out, out of the whole credit of 7,000, I am trying to find out what is the hodgepodge, the khichdi, which is business, non-business, taxable, exempt, mixed. ठीक है, तो I will do, sir, this is taxable, purely taxable supply related out. Now this is the khichdi, sir. Khichdi means the C2 common credit, C common credit. So sir, 5,000 rupees is your common credit. Now this credit which is there, I have already taken this 2,000 rupees ka credit also and this 5,000 ka credit also. What will I tell to the government now? I will go ahead and say, sir, I will tell to my client, hey sir, you have to go ahead and whatever out of this khichdi is relating to your exempt supply, you have to remove. Whatever is relating to your personal purpose also, you have to go ahead and remove. So sir, out of this, you have to calculate D1 and D2. So 5,000 into exempt supply by total turnover, whatever is relating to your exempt supply, supposingly this came out to be 1,000 rupees. Okay, so here out of this 5,000, first relating to exempt supply I have taken out, then D2 is for your personal purpose. D2 means 5,000 into 5%. So sir, 5,000 into 5% is 250 rupees. Now government is going ahead and telling credit out of the common credit which you are eligible, credit out of the common credit which you are eligible, and hence it is called C3. Okay everyone. Now so this will become 3750. I hope point is clear. Now listen, 7,000 you had already got the credit. See, This is 7,000. You have already got the credit. These two government is going ahead and telling you have to go ahead and reverse. You have to go ahead and reverse. I hope this point is clear to all. Now, if I have to go ahead and take the credit 7,000 rupees, reverse 1250, can you tell me net actually I am getting only 5750, which is nothing other than taxable supply related, and out of the whole khichdi this point. So, sir, whatever was taxable supply related plus out of the khichdi, the eligible part, I am getting the credit. Out of the khichdi, the eligible part is this one. So, this plus this is nothing other than 5750. I hope the point is clear. Yes, sir. Sir, can you please once again tell me? Yes, Baba, I'll go ahead and tell you. Listen carefully again for the people who are not listening. Again, listen. Sir, I went ahead and got all these invoices from my client. My client went ahead and gave me this invoice. First of all, I will go ahead and write the total credit 10,000. Sir, this is for your personal purpose. I caught the thief number one, personal purpose. The second one, sir, exam supply related exclusive out. Sir, your biryani bill, your laundry bills, all your personal purpose out, sir. Now, whatever is remaining is your C1. Whatever is remaining is your C1. ठीक है sir, C1 का credit you take in your e-credit ledger. ठीक है sir, I got the credit in my e-credit ledger. Now, this whole credit I have taken. Now they are telling you, please find out the hodgepodge, because out of the hodgepodge, whatever is relating to taxable, whatever is relating to exempt, and whatever is relating to a personal purpose will remove. So, sir, this is completely taxable supply, sir. This will not remove. Anyways, this credit, this whole credit I have already got. So, sir, whatever is relating to a taxable will keep on the side. And then whatever is coming is your hodgepodge. Out of the hodgepodge, some is business, some is non-business, some is taxable, some is exempt. So, what I will go ahead and do is, sir, exempt supply related out, and sir, I will also go ahead D2. D1 is relating to your exempt supply. So out of the hodgepodge, exempt supply divided by total turnover. Exempt supply divided by total turnover. And sir, D2 is nothing other than personal purpose ke liye. Just take out of this 5%. And sir, nothing other than these two will be reversed. In your, when you are filing your GSTR 3B, you will reverse it. So this credit you have taken and this credit you will reverse. So the balance amount will be your basically your balance is nothing other than your eligible common credit out of the common credit which you are eligible for. I hope everyone got it. Quickly give me a heads up. Are we all 100% clear till here? Yes, sir, we are all clear. Everyone over here, I taught you T. Say, first of all, you have to go ahead and remove T1, which is for your personal purpose, T2, which is your exempt supply related, T3, which is your block credit. You will get the credit. Please take the credit in the e-credit ledger. Please take the credit in your e-credit ledger. Out of this, taxable supply you keep on the side. You will get the common credit, the khichdi. Out of the khichdi, remove D1 and remove D2 and put it in your output, basically reverse it, and hence D1 and D2. How do we calculate D1? Common credit into exempt supply by total turnover, and then, sir, now exempt supply you have to take aggregate value. F is your total turnover. Remember, E by F may never consider central excise duty, state excise duty, VAT and CST, never consider it. Never consider. Okay, everyone. And E by F of this month is not available. Then take last month ka E by F and do the reversal. No problem, because government is telling every month what reversal you are doing is provisional. Year end pay, we will go ahead and do one final reversal also. Full year ke liye, we will calculate how much is the reversal at the year end also. ठीक है sir. Then C3 is nothing other than common credit, say your eligible credit. Okay, sir. Then Baba, D1, D2, etc. to be computed separately, and you have to declare in your GSTR 3B. D1 and D2, you have to go ahead and reverse in your GSTR 3B. Baba, you have to go ahead and reverse D1 and D2 in your GSTR 3B, or you can pay it through your DRC 03 also. Okay, now listen. Every month, April, May, June, July, August, September, you can do the reversal, but government is selling year end pay, full year ka common credit multiplied by full year ka E by F. You have to go ahead and do you have to go ahead and do one more reversal. Basically, full year ka you have to do the calculation, how much credit you would have reversed, monthly credit which you have reversed, also you have to do the total. So D1 and D2 final means full year ka you have to go ahead and calculate a common credit multiplied by E by F, and sir, common credit into 5% if there is any personal purpose. So D1 and D2 you have to calculate one whole year के लिए one फुल ईयर के लिए फुल ईयर का कॉमन क्रेडिट इनटू फुल ईयर का एग्जाम सप्लाई बाय टोटल टर्नओवर व्हिच यू विल गेट एज ऑन 31st मार्च बेसिकली ईयर एंड पे. तो गवर्नमेंट इज सेलिंग फाइनल D1 and D2 you have to calculate. For an example, the final D1 and D2 is 6 lakh rupees every month. April, May, June, July, every month what reversal you have done, do the total. Now supposingly that reversal was only 5 lakh rupees, then government is telling this actually you have done only 5 lakh, you should have done 6 lakh, and hence the excess will be added to your output tax liability. Basically you will have to go ahead and reverse along with interest at the rate of 18%. The last date to reverse will be 20th of October, and sir, it has interest will start from 1st of April because 31st December full year ka you have the exam supply, you should calculate and reverse as on 1st of April only. If you don't do the reversal from 1st of April, baba, your interest will start till the date of payment. You will have to go ahead and pay 18% per annum. Sir, supposingly finally I have to reverse only 5 lakh, but per month I have reversed already. Every month total I have reversed already 6 lakh, then 1 lakh extra reversed. You can go ahead and take the credit in your e-credit ledger. I hope everyone is clear. Baba, always remember T minus T1, T2, T3. You will get C. C say taxable supply remove. You will get common credit. Baba, nothing. D1 and D2 can be calculated. D1 and D2 you reverse it, and C1 ka credit you take it. I hope everyone is clear till here. Now, everyone over here, let's go to the next one. The next one talks about rule number 43. Rule number 43 is nothing other than your apportionment with respect to your capital goods. Please come to rule number 43 now. Now, the next rule is rule number 43. Everyone, rule number 43. Everyone over here. Rule number 43 is talking about capital goods. Everyone, capital goods ka apportionment is being spoken by rule number 43. I will go ahead and teach you quickly. Everyone listen. For an example, this is the month of July. For an example, this is the month of July. In the month of July, I went ahead and bought something for non-business purpose. Baba, I am talking about capital goods. Everyone, capital goods I am going ahead and talking about. Sir, non-business purpose, if I go ahead and buy something, then I will not get the input tax credit. Any capital goods exclusively for non-business purpose, you will not get the input tax credit. Okay. Now, I bought one capital goods exclusively for making exempt supply. I will not get the input tax credit. Okay, sir. Then I went ahead and bought a capital asset which is block credit. Then Baba, I will not get the input tax credit. I went ahead and bought one capital goods which is for taxable supply. Remember, input tax credit you will get also. You will get the same kind of question in the exam. Please be careful. So sir, non-business purpose, don't take the credit. Sir, exempt supply related capital goods, don't take the credit. Block credit, don't take the credit. Sir, taxable supply related, this taxable supply related, you will get the input tax credit in your e-credit ledger. Okay, sir, point is clear. The next one over here, sir, the next one is if I am going ahead and using something for taxable supplies also, including zeroed and exempt supplies also, I will get the input tax credit here. Here you have to remember, you will get the input tax credit in your e-credit ledger, and we go ahead and say this as A because it's the common credit and it will go for apportionment. A refers apportionment over here. Done, sir. Point is clear. Now listen to me very carefully. So here always remember this much, that sir, if I buy an asset for non-business purpose, I will not take the ITC. Exempt supply related capital asset, I will not take the credit. Block credit I have added over here. That sir, rule number 43 it is not told, but common sense, if any asset is there which you are taking for your, which is block credit, you will not get the credit. The next one over here is taxable supply, ITC, you will get in the e-credit ledger. Okay, sir. Taxable and exempt supply related, taxable and exempt supply related, if something is there, ITC, you will get in your e-credit ledger. But because it is used commonly, you will have to do some apportionment for exempt supply. ठीक है sir, point is clear. Now sir, supposingly I had gone ahead and bought one asset, supposingly in the month of January. Remember, I had bought one asset in the month of January, and that asset was for making supposingly exempt supply. It means I did not take the ITC. Yes sir, you did not take the ITC. Now I am thinking that I will start using the asset. I will start using the asset for taxable supply and exempt supply. Government is telling, oh, common use. Then government is telling over here, see, since you had not taken the ITC earlier, please go ahead and take the ITC now, and this ITC will go in your e-credit ledger. Okay sir, and because now it's a common use, exempt supply and taxable supply, there will be a for apportionment. ठीक है sir, point is clear. Then government went ahead and told Ramesh, supposingly in the month of January only you had gone ahead. I'm telling January, okay, in the month of January. Okay, now what will happen? Okay, one more thing over here, sir. Exempt supply asset, if I start using it commonly, then sir, because I had not taken the ITC earlier, I can take the ITC now, and this will go in my apportionment also. Plus, sir, January say till June, you have gone ahead and used it exclusively to make what? Exempt supply, correct? So government is telling this period के लिए whatever the tax is there relating to the interim period when it was used for your exempt supply, that has to be taken out. Sir, people went ahead and asked, how do we calculate that? Government told whatever the tax was there, of that you can go ahead and take 5%. You can go ahead and take 5% per quarter or part thereof, and that you can go ahead and add to your 5% per quarter or part thereof, and that amount you can go ahead and add it to your output tax liability. Okay sir, point is clear. Chalo, next one over here. If supposingly I had bought an asset which I was using completely for taxable supply, it means I had already gone ahead and taken the ITC. Now I am thinking to start using it commonly for taxable supply as well as exempt supply. So whenever taxable supply and exempt supply commonly I am going to use, then sir, will I take the ITC again? Baba, ITC in the e-credit ledger, you will not go ahead and take again, because earlier you had already taken the ITC. See, here you had not taken, so you went ahead and took it now. But here you had already taken, so in the e-credit ledger, don't take it again. ठीक है sir, point is clear. And always remember, earlier if it was taxable and now if it is common use, TIE ka calculation will not come. TIE ka calculation will come if in the interim period, tax relating to interim period, TIE, tax relating to interim period, when you had used it for exempt supply. I hope point is clear to all. Tax relating to interim period when you had used it for exempt supply. But here you had not used it for exempt supply. So TIE will not come. Okay, sir. Point is clear. Everyone over here. Now because this common credit apportionment will come, everyone over here. Sir, this will not be apportioned. Only 1, 2, 3. This all will be apportioned. So A. All the summation of the common credit will be now known as TC. A will be known as TC. Third, supposingly TC is one amount. Remember one thing, TC is the total common credit. Now total common credit, you will go ahead and apportion it over 60 months, and hence government says monthly portion you find out, because this month ka apportionment has to be seen, and TC divided by 60 will give you the monthly portion. Now monthly portion say also some will be towards your taxable supply, some will be towards your exempt supply, and tax relating to exempt supply has to be added to your output tax liability, which is nothing other than monthly portion multiplied by exempt supply divided by total turnover, and hence TE you will add it to your output tax liability. Sir, this TIE you will add it to your 5% per quarter of part thereof, you will add it to your output tax liability, and sir, these amounts you will go ahead and take the credit in your e-credit ledger. I hope everybody got it. I will go ahead and repeat once again. Listen to me very carefully. Non-business asset, don't take the ITC. Exempt supply, don't take the ITC. Sir, block credit, don't take the ITC. Taxable supply, just take the credit in your e-credit ledger. Sir, common asset, take the ITC in your e-credit ledger, but this will also go for apportionment. Okay, sir. Earlier you were using one asset for exempt supply. Now you started using it commonly. Then, Baba, because earlier you did not take the ITC, now you take the ITC also and take it for apportionment. And because earlier was exempt, now is taxable, calculate TIE. Okay, sir. Earlier I was using for taxable supply. Now I started using it for common use. Then earlier you had already taken the ITC. So don't take the ITC in your E-credit ledger. But this amount will go for apportionment. In the E-credit ledger, don't take it. But apportionment has to be done because it is common use. Whatever is to be apportioned, please take the total credit. Total credit has now, because the assets ka generally life is how much, everyone? 60 months, and hence we will go ahead and apportion it over 60 months. Monthly portion will come per month ka portion, whichever is there. Baba, the asset is used for taxable and exempt supply both, and hence we will go ahead and take tax relating to exempt supply by multiplying monthly portion into E by F. This will go to your output tax liability. This will go to your output tax liability, and this is the amount of credit you will get in your E credit ledger. I hope everyone is clear. Rule number 42 and 43 is done. I went ahead and told about A. Sir, TIE I went ahead and told you about. Summation of A will give you TC. Sir, TC divided by 60 will give you monthly portion. Monthly portion into E by F will give you TE. Monthly portion into E by F will give you the TE. I hope everyone is clear till here. E is your exempt supply, F is your total turnover. E is your exempt supply and F is your total turnover. Remember one thing, TE will be added along with interest to your output tax liability. Is everyone 100% clear? Can we go ahead? Remember, in rule number 42 and 43, there is no amendment. Only one GSTR2 ka reference was there because GSTR2 is deleted. So, sir, the reference also has been deleted. Rule number 43 may also GSTR2 ka one total bakwas old reference was there because GSTR2 is deleted. The reference also has been deleted. Nothing from exam point of view. Chalo, everyone over here, let's go ahead. Everyone, we are done with section number 17.1. Section number 17.1, 17.2 told about apportionment. Basically, you'll have to go ahead and follow rule number 42 and 43. Rule number 42 and 43 are done. Then we went ahead and learned when we are doing apportionment, this exempt supply, when we have to go ahead and take the turnover of exempt supply, how do we go ahead and find out the value of exempt supply? That is told by section number 17.3. 17.4 was banking companies, apportionment, or banking companies can go ahead and follow. Sir, banking company will go ahead and do apportionment, or banking company can take 50% of the credit and forget 50% of the credit. I hope everyone is clear with rule number 42 and 43. Now, the next one over here is section number 17.5, which goes ahead and talks about block credit. Please come to your chart of block credit, everyone. Please come to your chart of block credit. Now everyone, the next one over here is block credit. Let's go ahead and quickly do block credit, everyone. Block credit, section number 17. 5 goes ahead and talks about block credit. But block credit, very, very important from exam point of view. 100% A graded, 4 to 5 marks you expect and go. Sir, very important part. Big question ka part it can come. Individual question can come. Let's go ahead and do it now. Everyone, block credit. What is block credit? Section number 17.5 says, sir, see, section number 16 told if you buy something for your business purpose, you can take the credit. But government is now telling in section number 17.5 that, sir, even if you buy something for your business purpose, but our intention is not there. Our intention is not there to go ahead and give you the input tax credit, and hence we will not give even if you are using it for your business purpose. Government went ahead and told Ramesh, number 1, section number 17.5a, if you are buying a motor vehicle for transportation of person, always remember one thing, unless blocked, all the credits are always allowed. Unless blocked, all the credits are always allowed. Okay, it says motor vehicle, number 1, motor vehicle, number 2, for transportation of person, number 3, the approved seating capacity is less than equal to 13. Baba, less than equal to 13 including the driver. Please be very careful in your exam. Less than equal to 13 including the driver. So number 1, it's a motor vehicle. Number 2, it is for transportation of person. And number 3, the seating capacity is less than equal to 13. Then Baba, credit is blocked. I never told that motor vehicle for transportation of goods credit is blocked, or I am never telling that motor vehicle where seating capacity is more than 13 credit is blocked. We are just telling that always remember what is blocked is only blocked. If it is not blocked, and then always allowed if used for business purpose. Remember this point, everyone. Now, sir, if there is a motor vehicle for transportation of person and approved seating capacity is less than equal to 13, less than equal to 13, then sir, the credit will be blocked. But then if you are going ahead and using it for further supply, I buy a car to sell a car, further supply ke liye if you are using it for transportation of passenger, if you are using it for transportation of passenger and you are using it for training in such motor vehicle, then the credit will be allowed. Remember one thing, motor vehicle transportation of person, approved seating capacity less than equal to 13, only then the credit is blocked. But then also government told the credit of that motor vehicle will be allowed if you are using it for further supply, transportation of passengers, and sir, training. Okay, sir. If I'm at driving school and giving training with that motor vehicle, I can take the credit. The next one over here is vessel and aircraft. Baba, ship and aircraft, if you are buying, the credit will always be blocked. Then government went ahead and told if you are using it to make your outward supply, which is for the supply, if you are doing the vessel and aircraft car for the supply, if you are going ahead and using it for transportation of passenger, or you are using the vessel and aircraft for training, always remember one thing, training is given in vessel, it is known as navigating in vessel. And sir, whenever training is given for aircraft, it is flying aircraft, and hence training can be navigating vessel and training can be in flying of aircraft. Now listen to me very carefully. Here the goods ka motor vehicle ka credit was never blocked, and hence they did not write it in the exception. But here if you see, the vessel and aircraft ka total credit was blocked, and hence they went ahead and told if it is for transportation of goods, exception and credit will be allowed. I hope point is clear. Always remember, if main vehicle पे credit is blocked, if main vehicle पे credit is blocked, that vehicle का servicing, insurance, repair and maintenance का credit also will be blocked. But main vehicle पे credit is allowed, then that vehicle का servicing, insurance, repair and maintenance का credit also will be allowed. It says over here, servicing, insurance, repair and maintenance, generally any servicing, insurance, repair and maintenance credit will be blocked. But if sir, you are going ahead and using the motor vehicle for specified purpose, for the supply, transportation, transportation of passenger, training के लिए you are using the motor vehicle, vessel and aircraft for transportation of goods, in that scenario where the credit is allowed on the main vehicle, credit is allowed on servicing, insurance and repair and maintenance also. Okay sir, but sir, if main vehicle पे credit was blocked for you, if main vehicle पे credit was blocked, servicing, insurance, repair and maintenance पे whatever GST is there, that credit also will be blocked. Then they went ahead and told servicing, insurance, repair and maintenance ka credit will be allowed if you are a taxable person who is into manufacturing of motor vehicle, vessel and motor vehicle, vessel and aircraft. Sir, servicing, insurance, repair and maintenance ka credit will be allowed if you are a person who is into manufacturing of motor vehicle, vessel and aircraft. Motor vehicle, vessel and aircraft is MVA. ठीक है sir. After that, it says, sir, servicing, insurance, repair and maintenance ka credit will be allowed. If I am a person who is into general insurance, I went ahead and insured one car, that car met with an accident. So, if I am getting any servicing, repair and maintenance of that car, which is being insured by me, then I will get the credit. It says, if a person is supplying general insurance in respect of motor vehicle, vessel and aircraft insured by him, then he can take the credit. Quickly tell me everyone, motor vehicle, the credit, motor vehicle, transportation of person, less than equal to 13, the credit is blocked, but then FTT ke liye credit will be allowed. Vessel and aircraft, the credit is blocked, but for FTT, the credit will be allowed. And if it was for transportation of goods, vessel and aircraft ka case mein they told, if it is for transportation of goods, the credit will be allowed. Remember, motor vehicle mein they never block. Motor vehicle mein they never block transportation of goods. Motor vehicle used for transportation of goods are always allowed. ठीक है sir. Vessel and aircraft they went and allowed and told vessel and aircraft used for transportation of goods, the credit shall be allowed. Servicing, insurance, repair and maintenance, the credit is blocked. But if you are using it for your specified purpose, which is FTT, etc., the credit will be allowed. Sir, if you are a manufacturer or if you are a person who is giving general insurance business, if you are in general insurance relating to that motor vehicle, vessel and aircraft, that servicing, insurance, repair and maintenance ka credit will be allowed to you. Okay, sir. After that, we have section number 17.5b, which goes ahead and tells that following goods, services or both ka credit will always be blocked. Credit will always be blocked of following goods, services or both. Number one, food and beverages. Always remember food and beverages. If you buy, sir, you went to one hotel, bought some food and beverages. Baba, all the food and beverages ka credit will not be allowed. Then, sir, outdoor catering ka credit will not be allowed. Sir, beauty treatment. Shah Rukh Khan ka company went ahead and told for Shah Rukh Khan will hire a beautician and get beauty treatment. Beauty treatment ka bill ka credit you will never get. The next one over here is leasing, renting, hiring of motor vehicle, vessel and aircraft. If you are a person who is, if you buy motor vehicle, vessel, aircraft, credit is not there. You went ahead and told, if I am buying, credit is not there. Always remember one thing, on buying if credit is blocked, if you take it on lease, renting or hiring also credit will be blocked. Buying of motor vehicle, vessel and aircraft, if credit is blocked, leasing, renting, hiring of that motor vehicle also credit will be blocked. Sir, if I am a person who is doing further supply, transportation, training, etc., in that scenario, if I am going ahead and taking motor vehicle on lease, rent or hire, then sir, for me credit will be allowed. But sir, for those people for whom buying by credit is blocked, for those people taking it on lease, rent or hire also credit will be blocked. That's all is being told over here. Leasing, renting, hiring of motor vehicle, vessel and aircraft, the credit will always be blocked. Buying by credit blocked, leasing, renting, hiring pay also credit is blocked. But sir, wherever buying pay credit was allowed, basically they are telling except where it is used for specified purpose. For an example, I am a person who is giving renting of motor vehicle. Then if I buy it, then also I get, sorry, not renting, I'm for the supply, renting. For the supply includes renting also. If I am going ahead and giving lease or rent of motor vehicle, vessel, aircraft, then sir, if I buy the motor vehicle, vessel, aircraft, I get the credit. If I take it on lease also, I will get the credit. The next one over here is health services, you don't get the credit. Cosmetic and plastic surgery, you don't get the credit. Life insurance and health insurance, you don't get the credit. My question to you guys is, everyone, what is blocked over here? Leasing, renting, hiring of motor vehicle is blocked. Now supposingly I went ahead and took one lease pay, one machinery. If I take a machinery on lease, can I take the ITC is my question. If I go ahead and take a machine on lease, can I take the ITC or any other item? Or any other items, if I take it on lease or rent, can I take the ITC? What is blocked is relating to motor vehicle, vessel and aircraft. If I go ahead and take a machine or any other item on lease, can I take the ITC? Baba, unless blocked, everything is allowed. So clarification given by the government. This is an small circular clarification given by the government. Leasing, renting, hiring of motor vehicle, vessel or aircraft is blocked. Any other machine or any other item, credit is, ITC is always allowed. It is not blocked. That clarification government went ahead and gave. Okay, sir, government gave the clarification. Now, listen, food and beverage, outdoor catering, beauty treatment, leasing, renting, hiring of motor vehicle, vessel, aircraft, health services, cosmetic surgery, and plastic surgery, life insurance and health insurance, the credit is blocked. But then sir, this is generally the credit is blocked. But sir, if it is subcontracting pay credit will be always allowed. Means food and beverages wala to another food and beverages wala, I can take the credit. Sir, caterer to another caterer, yes, this caterer can take the credit. Sir, always remember, all these people going ahead and doing subcontracting. Subcontracting means same category may supply, then the credit can be taken. Now everyone listen to me very carefully. If all these are taken as an element of taxable composite supply and mixed supply, then sir, ITC will be allowed. Supposingly we have over here, where is our favorite Venki? Yes, we have Venki supposingly. Now I'm going ahead and telling Venki told me, sir, can you get me married? I told, okay, I'm an event manager. I will go ahead and get you married. Now, means I will go ahead and organize the function. Okay, everyone. Now I'm going to organize the function for Venki. I went ahead and told, okay, Venki, we'll get the event organized for you. The main work of mine is event organizer. I am an event organizer. Okay, everyone. I'm an event organizer who is there. Now, event organizer, now you went ahead and told, Venki went ahead and told, sir, I want you to get food and beverages in my marriage. Food and beverages, you only take care. I bought food and beverages to supply food and beverages. He went ahead and told, sir, catering, you only take care. I took catering a service to provide catering. He went ahead and told, sir, I want some denting painting services. Everyone, I want some denting painting service. Okay, I took beautician. I got one beautician so that denting painting of Venki can be done. ठीक है. He told, sir, I want to come in a car for my marriage. I took car ka lease to provide the car for his marriage. Okay, then he went in and told, sir, some beauty treatment, cosmetic surgery also I want. I took cosmetic surgeon ka service to provide him the service. He told, sir, I'm getting married. Life ka risk is there. Life insurance also you take. Now, everyone, listen to me very carefully. If I am going ahead and taking all these things as an element of my composite supply or mixed supply, event management services are taxable, and hence when I am going ahead and providing all this as an element of my composite supply or mixed supply, on all this item I will charge GST and I will be able to take the input tax credit. Remember one thing, I will be able to take the input tax credit. ठीक है sir, point is clear. Generally no ITC, subcontracting yes ITC, but if it is provided as an element of my composite supply or mixed supply, I will be able to take the ITC of all these items. The next one over here is I told my director, go to the club. When you meet people, you will go ahead and meet people. You will meet people, business will grow. Go to the club. Club membership ka you give us the bill. I will not be able to take the ITC in my business. I told my directors, you have become fat. Go to the health and fitness center. Be fit. Now they went to the health and fitness center, gave me the bill. In our business, you will not be able to take the credit. Okay, sir. Health and fitness center, you can't take the credit. ठीक है sir, health and fitness center, club membership, you can't take the credit. Now, travel benefits to employees on vacation. Everyone over here, government is, you went ahead and told your employees, wow, you have gone ahead and done amazing job. I'll go ahead and send all of you. I will go ahead and send all of you for a trip to supposingly anywhere. ठीक है. Now the trip का all the expenses which will be there, whatever GST is charged, you will not be able to take the credit. Everyone listen to me very carefully. If 1, 2 and 3 is provided as an obligation under law from the employer to the employee, then ITC will be allowed. For an example, remember 1, 2 or 3, anything provided as an obligation under the law formed by an employer, it is obligatory for the employer to provide to the employee, then credit will be allowed. For an example, it is obligatory for the employer to provide food to their employee under the Factories Act, and hence to provide that food, catering services are taken, then yes sir, catering services ka ITC will be allowed. So sir, he hired a caterer so that the food can be served to the employees in the factory, and the credit of the outdoor catering will be allowed because the service has been provided as an obligation under law. Remember one thing, this or this, if it is provided as an obligation under law, ITC will be allowed. Now sir, what is the clarification? One more clarification came that sir, this obligatory under law wala point, is it applicable only to 1 or is it applicable to 1, 2 and 3? I had always told that it is applicable to 1, 2 and 3, all the 3 part, and hence this proviso which is there, the clarification which came is this proviso which is there is applicable to all the 3. So Baba, clarification does not mean clarification because I had already told in the class that sir, it's a proviso which is applicable to all the 3. Done sir, point is clear. Chalo, right side everyone. The next one over here is works contract service. Works contract service, whenever it is capitalized, works contract service whenever it is capitalized. Remember one thing, works contract is always in relation to immovable property. I went in and told one person, can you make the building for me? He told, okay sir, I will get the goods, I will get the laborers and I will make the building and give it to you. Now when he makes the immovable property for me, whatever works contract per GST will charge, I will not get the credit. I will not get the credit. Works contract ka credit I will not get. Supposingly I told one person, sir, you come and make one machinery for me. He went ahead and got his goods, he got the laborers and he built one machine for me for the immovable property. Machine is immovable, it is attached to the building supposingly. So immovable property which is machine, then sir, whatever he charges me, I will get the credit. I am a person who is giving works contract service, taking works contract service, I will get the credit. Works contractor to works contractor, credit will be always allowed. Okay, sir. Now listen to me very carefully. One more thing I will go ahead and tell you over here that, sir, works contract service. Supposingly in my home there was a small portion which was broken in the side. I went ahead and told one person, get your material, get your laborers, repair this and go. Not in my home, in my office building. Okay, everyone, personal expense. Anyways, you don't get the credit. I went ahead and told him to repair my office ka building. He charged me 10,000 rupees plus 2,000 rupees GST, and I put the 10,000 rupees in my P&L account. Remember, when I put that amount in the P&L, that time I can take the credit. That time I can go ahead and take the credit. Because only if it is capitalized, then Baba ITC will not be allowed. Okay, sir, point is clear. The next one over here, I told, hey, who will go ahead and take the services of a works contractor? He will go ahead and charge me GST. Works contractor will go ahead and charge me GST, and I will not be able to take the ITC. I will go ahead and buy the goods. I will take some architectural ka services. I will take some labor ka services and make my own building. Government told you make your own building or you take works contract service. You will not get the credit. Government is going ahead and telling very clearly, goods services received by a taxable person for construction of immovable property on own account also, you will not get the ITC. But if I am buying some goods, services, etc. to go ahead and construct plant and machinery, then the ITC will be allowed. Remember one thing, if supposingly for construction of a small immovable property, I went ahead and spent 20,000 rupees, GST paid 4,000 rupees on the goods and services, and I have put the expense in the P&L account, then I can take the ITC. But sir, if you capitalize the expense, then capitalize the GST also, you will not be able to take the ITC. Baba, you take works contract service for immovable property, or you go ahead and construct the immovable property on your own. Only if you capitalize, remember, ITC will not be there. Plant and machinery, always ITC will be there. Works contractor to another works contractor, ITC will always be there. Are we all clear, everyone? Are people awake? Yes, sir. The next one over here. The next one over here is, sir, I went ahead and took composition registration. Composition may have paid 1%, 1%, 1%, 5%, 6% composition tax. When I have gone ahead and paid, the recipient will not be able to take the ITC. Recipient is not eligible to take the ITC. Baba, anyways, I'll give him bill of supply. On the basis of bill of supply, he will never get the credit. If I am an NRTP, government went ahead and told, if you are a NRTP, non-resident taxable person, NRTPs will never get the credit of the goods, services, or both ways they buy in India. But if they import some goods etc. on the goods, whatever on the goods GST is being paid, that IGST ka credit they can go ahead and take. The next one, I bought something for personal purpose. Government told, personal purpose you never get the credit. Sir, goods lost, ITC lost. Goods stolen, ITC stolen. Goods destroyed, ITC destroyed. Goods eaten by rats, ITC eaten by rat. Baba, goods burned, ITC burned. Remember one thing, everyone, these are thief cases which I call. Government knows that you are lying, and hence government says whenever goods are lost, ITC lost. Goods stolen, ITC stolen. Goods destroyed, ITC destroyed. Goods written off by way of gift or free sample, ITC also gifted, you think. Okay, sir. The next one over here is, you were going on the way, you were caught by the officer. Officer went ahead and told, why are you charging 5%? Then you went ahead and told, oh sir, sorry. Officer went ahead and raised a demand order on you, and you landed up paying 13% GST extra. For an example, 18% GST was there on the goods. You charged only 5%, and you were transporting because the recipient told, sir, please charge 5%. Who will catch? I told, hey, if somebody catches. Now here you are caught on the way, and demand order was given, and you paid the tax. That tax ka credit you can't take, you can't pass it on also. That tax ka credit no one will get. Sir, tax paid in accordance with section number 74 means you are doing some fraud, willful misstatement or suppression, and you are caught and you paid some tax. That tax ka credit you will not be able to take also, you will not be able to pass on also. Sir, 129, you are going on the way, you are caught. 130, confiscation happened, and because of confiscation you paid some taxes. All those taxes ka credit will never be allowed. Evasion, detention, confiscation etc. ka case mein, if caught, tax paid, forget it. So I call this as total thief. Why total thief? Thief, though you are there only. You are caught, so you have become a complete thief. Total thief. Now everyone over here now. Sir, what do you mean by construction? Construction ka credit is not allowed. I went ahead and told construction of immovable property credit is not allowed. Remember, only if it is capitalized, then credit is not allowed. If you go ahead, Baba, if you go ahead and take it to your P&L account, then the credit will be allowed. Okay, sir, point is clear. Sir, plant and machinery means what? It means apparatus, equipments, machinery which are fixed to the earth. So for an example, this is my building. In my building, I have gone ahead and got one boiler fit. What is boiler, everyone? In which we boil human beings. No, Baba, boiler may you boil iron, steel, etc. Okay. Baba, only for classroom purpose. Everything told in class is only for classroom purpose. Everyone over here, this boiler is fitted to the building now, attached to the building, and hence it is immovable. Sir, if they say any apparatus, machine, or equipment fixed to the earth by foundation or and structural support, and this machine has been used towards outward supply, and it always includes such foundation and structural support, you will be able to take the ITC. Remember one thing, that structural support and foundation ka also you will be able to take the ITC, but land and building, any civil structure, you make the whole building around it, all this ka credit you will not get. Telecommunication tower, you will not get the credit. Telecommunication tower, you will not get the credit. Telecommunication equipments, you will get the credit. The next one, pipelines outside the factory also, you will not get the credit. Pipelines inside the factory, you will get the credit. I hope everyone is clear. Remember, how will you remember this, everyone? Sir, this person needs health services. This person needs beauty treatment. Little plastic surgery also you get it done. All the three. Baba, everything told in class is only for classroom understanding. All the three credit you will not get. Sir, he went ahead and did what? He took a motor vehicle, vessel or aircraft and he went to the gym. Baba, always remember fitness center ka credit GST paid, you will not get the credit. You went to a club, he went to gym, he went to club. Sir, club membership also credit you will not get. And then he became a bodybuilder. Now bodybuilder, he started doing conflicts ka credit you don't get. C for construction. Remember one thing, construction, whether it is own construction, whether construction you are doing own construction, or you are going ahead and getting work contract service done, you will not get the credit. If it is construction, remember one thing, construction capitalized. Construction, which is basically works contract service, or own construction, which is capitalized. ठीक है sir, construction of immovable property. Okay. O for outdoor catering. Outdoor catering, you will not get the credit. And for NRTP, doesn't get the credit other than goods which are imported by him. F for food and beverages ka credit you will not get. LI for life insurance and health insurance ka credit. Life and health insurance ka credit you will not get. C for composition tax which you pay, your front party will not be able to take the credit. Anyways, you give him bill of supply. T for travel benefits given to employee who are on vacation. Sir, T for thief, goods lost, ITC lost, goods stolen, ITC stolen, goods gifted, ITC also gifted. And the next one is total thief. Total thief means you are going on the way, basically you are trying to do some evasion, or might be detention happened or confiscation happened under section number 129, 130 and section number 74. May if you have gone ahead and paid any taxes, that tax ka credit you will also not get. If you want to pass it on also, you will not be able to take that tax ka credit. Here I am done with block credit, everyone. Listen to me very carefully. I have taught you section number 17. Section number 17, 1, business purpose, non-business purpose. If you are using something, you will get the credit only relating to business purpose. 2 went ahead and told taxable supply, including zero trade and exempt supply, you will get the credit only relating to taxable. How much you will get, how much you will not get, government will tell, and government told rule number 42 and 43. Section number 17, 3 went ahead and told about exempt supply. Sir, section number, for the purpose of apportionment, what will be exempt supply? Section number 17, 4, banking companies basically NBF ke liye they went ahead and told either apply apportionment method or Baba take 50% of the credit and forget 50%. Distinct person say when you take 100% of the credit. Section number 17, 5, I went ahead and told you block credit over here. Remember, from your exam point of view, block credit is the most important part over here. The second most important part is this apportionment wala method, and when you have to do the apportionment, you have to know what is the value of your exam supply. Right, everyone? Done, sir. Point is clear. I will go ahead and close my discussion on section number 17 over here. Now, let's move to the next section. The next section is section number 18. Everyone, over here now, let's move to the next section. Section number 18, everyone. Everyone, over here now. We started learning GST with, not GST, we started learning ITC chapter with section number ITC chapter में we learned section number 16. We told about eligibility and condition. 17 apportionment and block credit. Now we have section number 18, which goes ahead, everyone over here now, which goes ahead and talks about special circumstances when we can go ahead and take the credit. Okay, sir. Chalo, let's go ahead. Everyone over here now. Section number 18, let's go ahead and start. Chalo, section number 18, circumstances when, special circumstances when credit will be given. Section number 18 has section number 18.1 to section number 18.6. Section number 18.1 has 4 parts, 18.1 A, B, C, D. Let's understand section number 18.1 A, B, C, D. Always remember one thing, sir, whenever section number 18.1A and B is applicable whenever you are taking registration for the first time. Section number 18.1 C and D, 18.1 C and D is applicable when you are already a registered person in that scenario. Chalo, section number 18.1A says new registration. Sir, I became liable. People, you became liable over here. You applied within 30 days. Registration granted. Registration will be effective from the date of becoming liable. Yes, sir. From the date of becoming liable, registration made effective. Always remember one thing. Always remember one thing. The date of becoming liable, if your registration is effective, 1 day prior. What date of when he becomes liable? 1 day prior, because you have applied within 30 days and registration certificate granted. Registration certificate will be valid from the date of becoming liable. Then from the date of becoming liable, 1 day prior, whatever input is there in stock, input is there in semi-finished goods or finished goods held on the day immediately preceding the date of becoming liable, stock and capital goods. Basically capital goods ka credit you will not get, stock ka credit, basically inputs which are there in your stock, inputs which are lying in your semi-finished goods, inputs which are lying in your finished goods. On those inputs, whatever GST was paid, you will be able to take the credit. Done, sir. Then the next one over here is voluntary registration. Voluntary registration ka case mein, the day you are granted the registration, from that day you start charging GST. So 1 day prior to the date of grant of registration, sir, from the date of grant of registration ka 1 day prior, whatever input is there in your stock, semi-finished goods and finished goods, you will be able to take the credit. Always remember one thing, 18.1 A and B mein capital goods ka credit is not given. ठीक है sir. Next one over here is section number 18.1 C and 18.1 D. Section number 18.1C says, sir, you were a composition dealer, now you become a normal person. When you were a composition dealer, you would not have taken the ITC. For an example, from now, you are a normal person, you have started charging GST. Then government is telling 1 day prior, whatever the composition person became normal person, regular taxpayer. Sir, composition tax he was paying under section number 10. Now he is paying tax under section number 9. The day he starts paying tax under section number 9, he will be able to take inputs which are lying in stock, inputs which were there in semi-finished goods, inputs which were there in finished goods. On those input, whatever tax was there paid, he can take the full credit now. Capital goods, he can take whatever was the credit minus 5% per quarter or part thereof. Remember one thing, everyone, quarter is always fixed. In GST. April, May, June, July, August, September, October, November, December, Jan, Feb, March. Quarter is always fixed. ठीक है sir, point is clear. Capital goods पे credit you will get 5% reduced. Then we have section number 18.1D. Earlier you were making exempt supply. You were a registered person. Registered person, you are making taxable supply also and exempt supply also. For taxable supply, you are already registered person, but you are making exempt supplies also. And for the exempt supply, whatever inputs and capital goods were bought, you did not take the ITC. But now that exempt supply have become taxable supply, then from the day that supplies have become taxable, one day prior, whatever, from the day the supplies have become taxable, one day prior, whatever input was there in your stock, input was there in your semi-finished goods and finished goods, plus capital goods ka credit also you will be able to take. Remember one thing, 18(1)(a) and B में only inputs ka credit you get, 18(1)(c) and D में you get inputs ka credit also and capital goods ka credit, ITC minus 5% per quarter or part thereof. Remember one thing everyone, if you don't apply within 30 days of becoming liable and registration certificate is granted. Remember one thing, in that scenario, stock ka credit is not given at all. If you don't apply within 30 days, if you don't apply within 30 days of becoming liable, stock ka credit is not even given at all. At all, you will not get the stock ka credit. The next one over here is 18(2). Whenever in special circumstance, you are taking input or capital goods ka credit. Remember, only in special circumstances, when you are taking capital goods and inputs ka credit, you will not be able to take if invoices are older than 1 year. Invoices older than 1 year, you will not be able to take the credit. Now, special circumstance may how to take the credit is told by rule number 40. Rule number 40 goes ahead and says, manner of claiming credit in special circumstance. Special circumstance mein how will you take the credit? ITC on capital goods under 18(1)(c) and D, whatever is the input tax on buying minus 5% per quarter or part thereof from the date of invoice, remaining amount you will be able to take the credit. Next one, sir, how do I take the credit? Government went ahead and told go online within 30 days plus further extension can be given. You can file one declaration which is GST ITC 01. Whatever is your stock ka credit you are eligible. If you are eligible for capital goods ka credit also, please write down in ITC 01 and file the ITC 01. Officer will go ahead and give you the credit. Remember one thing, in the ITC 01, you should go ahead and tell what is your input in stock, semi-finished goods, finished goods, and the capital goods basically for which you are going ahead and on the day immediately preceding, you will have to go ahead and mention that inputs and capital goods ka detail. On the day immediately preceding means, sir, these dates say immediately preceding date pe whatever inputs were there and capital goods were there, that detail has to be given. Also remember, if ITC 01 may the credit which you are going ahead and claiming, ITC 01 may the credit which you are going ahead and claiming is more than 2 lakh rupees, then chartered accountant or cost accountant certificate will be required. 18(1)(c) and D, because you are already a registered person, now also you will be a registered person. Government is telling earlier when you are a registered person, when you would have bought, you would have already gone ahead and given your GSTN number while buying, might be composition dealer, but you would have already given your GSTN number and hence the supplier would have already given the details to the government under your GSTN number. Now normal taxpayer you are, but sir, GSTN remains same and whatever you are claiming, government will go ahead and verify with the details which were provided by the supplier in their GSTR 1 or GSTR 4. Done, sir. Point is clear. Section number 18, I went ahead and told you section number 18(1), A, B, C, D, and section number 18(2), I went ahead and told you. Section number 18(2) I went ahead and told that, sir, invoices older than 1 year, special circumstance only. Remember, invoices older than 1 year, you will not be able to take the credit. Now, section number 18(3) over here, Sir, government is going ahead and telling Ramesh, if you go ahead and transfer your business to someone, if you sell your business to someone, A and B companies became AB Limited, A and B became AB Limited, might be one big company, say some demerger happened. Always remember one thing, whenever in case of change in constitution of a registered person, ITC can be transferred to the transferee. When there is a sale, any merger has happened, demerger, amalgamation, lease, transfer of business, including death, always remember you will be eligible to go ahead and transfer the credit. Registered person will be allowed to transfer the credit, which remains in your e-credit ledger. So I transferred my business, I transferred all the assets and liability to this guy. Now, section number 22(3) and section number 22(4), do you remember? Transferee is liable to register. Now, this transferee, once he is registered, what will I do? I will also transfer the credit to the e-credit ledger. Everyone over here, ITC which remains unutilized in the e-crate ledger, you can go online. Rule number 41 says file GST ITC02 declaration. I will file ITC02. It will come to your the transferee car. It will show it to the transferee. He will accept and the amount will come to his e-credit ledger. I hope this point is clear. Remember, normally credit transfer is not allowed, but only in special circumstance you can go ahead and transfer the credit. You can go ahead and transfer the credit. Sir, what is special circumstance? Sale, merger, demerger, etc. का case में file ITC02 and the credit can be transferred to the transferee. The next one over here is in case of demerger, A limited, B limited. A limited was there. A limited demerged one small part. Now, whenever one demerger is happening, how will you apportion the credit? 1000 crore ka assets were there. 800 crore ka assets are remaining over here. 200 crore ka assets are going over there. Then, sir, 8:2 ka ratio mein whatever the credit is there, basically 20% of the credit you can transfer to the transferee. In case of demerger, ITC apportionment in the ratio of value of assets of the new unit. And then it says, sir, the time limit to go ahead and file ITC02 to take the credit is, there is no time limit, but CA square. CA square means everyone, chartered accountant or cost accountant. Chartered accountant or cost accountant certificate is mandatory irrespective of the amount. Irrespective of the amount, chartered accountant, cost accountant certificate is mandatory. Here one more rule is there. Supposingly in one state I had two place of business, one was principal, one was additional place of business. It means it had only one registration. One registration means one e-credit ledger. Now what happened, both this was already registered. This additional place of business, I took a separate registration. Then, Baba, now this additional place of business has a separate e-credit ledger. Government is going ahead and telling simple, Ramesh, whenever you go ahead and take separate registration in the state and you want to transfer the credit to your distinct person, you can do the transfer by filing transfer of ITC to distinct person. Can also be done in asset ratio, and you can go ahead and file same registration if done, separate registration if you take within the same state or UT. ITC02A, GST ITC02A, you have to go ahead and file within 30 days. I hope this point is clear. Everyone listen to me very carefully. Now there is section number 18.4. Section number 18.4 goes ahead and says, listen, composition person, when he became regular taxpayer, you took the credit. Exempt supplies of a registered person became taxable supply, you took the credit. Now what if it is ulta? Ulta is being spoken over here in 18.4. It says normal person became compo, or taxable supplies of a registered person became exempt supply. In that scenario, normal person, you were there, you were taking the ITC. Composition person, you can't take the ITC. So whatever ITC is there in your stock, semi-finished goods and capital goods, you have to go ahead and reverse that credit. Sir, taxable supplies of a registered person became exempt supply. Then whatever, when it was taxable supply, you would have already taken the ITC. Now that the supplies have become exempt, you will not charge GST. So whatever the ITC is there, you have to go ahead and reverse. That is being told by section number 18.4. Section number 18.4 goes ahead and says, payment of ITC on switching to composition means normal person became compo, or sir, taxable supplies became exempt supplies. Remember one thing, now what will happen? ITC reversal will happen. Everyone over here, rule number 44 goes ahead and talks about ITC ka reversal. It says manner of reversal under special circumstance. Reversal with respect to input which are there in your stock, semi-finished goods and finished goods. Whatever ITC you have taken, please go ahead and reverse it. Capital goods. Remember, monthly calculation has to be done. Means supposingly you were under normal scheme for 12 months. Then, sir, one asset ka life is always assumed to be 60 months. 12 months gone, 48 months. Now you are not. You were earlier a normal person, now you are a composition person. So under composition, you are going to use the machine for 48 months. So 48 months ka reversal has to be done. Monthly calculation in case of capital goods. Monthly calculation in case of capital goods. Everyone over here. Capital goods held in stock. Remember ITC availed. See, stock का केस में, इनपुट्स का केस में नथिंग. Whatever credit you have taken, please reverse the full credit. Capital goods का केस में divided by 60, and whatever is the remaining life, monthly calculation, you will have to go ahead and do the reversal. Amount of, so ITC availed divided by 60 multiplied by balance life. Sir, amount of reversal to be calculated separately for CGST, SGST, IGST and UTGST. If input If tax relating to inputs is unavailable, government is telling, sir, no problem. If you don't have the invoice, tax invoice is missing, then do one thing, estimate the value based on the basically you'll have to estimate the inputs ka value as on today. Market price has to be taken on the date of the event. Amount determined can be added to the output tax liability. You will have to file GST ITC 03. Once you file your ITC 03, whatever the reversal amount is there will be added to your output tax liability. The next one over here is there is no time limit to go ahead and file ITC 03, but no CS certificate is also required. CS certificate also not required, but it will be required if fair market value is used. It shall be certified by a practicing chartered accountant or cost accountant. Means if you go ahead and take inputs ka market value on the date of the event, then and you are trying to do the reversal, in that scenario CS certificate will be mandatory. Other than that, section number 18.5 is there over here. 18.5 says, please, whenever you are taking the credit or you are reversing the credit, please go ahead and follow rule number 40 and rule number 44. Okay, sir, it is giving Gyan. So, Baba, okay, we will follow rule number 40 and rule number 44. Done, sir. Point is clear. Then we have section number 18.6, which says, important it is, everyone. It says, if you have gone ahead and supplied capital goods and plant and machinery on which ITC has been taken, if you had gone ahead and taken the ITC on capital goods and plant and machinery, then they are telling registered person shall be allowed to go ahead and take whatever input tax credit you had gone ahead and taken minus 5% per quarter or part thereof. You will get the reduced amount of credit which is there, or that sale value pay whatever GST comes, whichever is higher. Remember one thing, capital goods and plant and machinery, if you are going ahead and selling, then whatever ITC minus 5% per quarter or part thereof, ITC minus 5% per quarter or part thereof, whatever is the remaining amount, that one, or sale value pay whatever GST comes, that has to be paid, whichever is higher. Remember, this clause is not applicable. For whom this provision is not applicable? If you are going ahead and selling molds, jigs, dies, etc. as scrap, then you can just pay the tax under section number 15, which is basically the transaction value pay. You can go ahead and pay the tax. Everyone over here now. We are done with section number 18. Now, section number 18 is done. Everyone over here. We have some circulars over here. Let's go ahead and quickly wrap up the circulars, everyone. Let's go ahead and understand the circulars which are there. Everyone over here. ITC apportionment in case of business reorganization, section number 18.3, read with rule number 44. It talks about demerger. Basically, the circular had come with respect to demerger. Sir, now everyone over here, the first question I'll tell you, what people went ahead and told is, sir, supposingly I am there in the state of Maharashtra, X Limited is there in the state of Maharashtra also, and it is there in the state of Delhi also. Okay, sir, X Limited is there in the state of Maharashtra also and Delhi also. Here the assets is 60 crore, here the assets is 30 crore. Okay, sir, the assets is 60 crore and here the assets is 40 crore. For an example, it demerged a small part of it and it went ahead and made Y Limited. A demerger happened and the demerged unit is Y Limited. Now what will happen? It will go ahead and transfer the assets from here. Now supposingly 50% of the assets are transferred from here. It means 30 crore ka assets were transferred. Supposingly here only 25% assets were transferred. It means 10 crore ka assets were transferred. If you go ahead and see over here, the total assets is 100 crore and here what is the assets being transferred, everyone? Sir, if you go ahead and see the assets being transferred is 40 crore, it means overall all India basis pay, if you see X Limited ka Y Limited ko 40% of the assets are transferred. Okay, sir, 40% of the assets are transferred. Now people went ahead and asked, sir, Maharashtra may also be demerged small part and sir, Delhi may also X Limited demerged small part. Now, when they are going ahead and transferring the ITC, should they transfer 40% of the ITC to the other demerged unit, or in Maharashtra they should transfer 50% of the credit from their e-credit ledger to the demerged unit? They should go ahead and transfer 50% of the credit in Maharashtra and Delhi may 25% of the credit. from their e-credit ledger, or overall India basis pay, they should do 40% in Delhi also and 40% credit transfer in Maharashtra. Government clarified simple thing. ITC apportionment, value of asset of new unit to be taken at state level, that is at distinct person level and not all India level, and hence in Maharashtra you will transfer 50% credit and in Delhi you will transfer 25% credit, that is on the basis of the assets which are transferred at each distinct person. I hope point is clear. The next one over here, chaliye, let's go ahead everyone. Everyone over here. Now people went ahead and asked, supposingly X Limited is there in Maharashtra also, Delhi also, and X Limited was there in Kerala also. Now in Kerala, X Limited had 20 crore ka asset, but in Kerala there was no demerger. Means from the Kerala unit, there was no demerger which was being done. Means there was nothing which was being transferred to Y Limited. The question which was asked is, sir, since there is no Y Limited in Kerala, see, here we will file ITC 02 and transfer the credit. Here we will file ITC 02 and transfer the credit. But because in Kerala, there was no recipient only who is there, means the demerged unit is not there only, do I have to file ITC 02? Government told, no, you don't have to go ahead and file GST ITC 02. You have to file ITC 02 only in those states where the both the companies are basically the unit which is the main unit and the demerged unit, both are there. They are going ahead and telling ITC 02 only in those states where transferor and transferee are registered. Next. Sir, then the people went ahead and asked, sir, tell me one thing. You went ahead and told that on the basis of asset transfer, you have to transfer the ITC. Only in case of demerger. When you read the rule is going ahead and indicating that you have to transfer the credit in the asset ratio in case of, sir, only demerger. Now, sir, is this applicable only for demerger that we can transfer in the asset ratio, or is it applicable for all kind of business reorganization? So government went ahead and told it is applicable for all kind of business reorganization. For an example, one father's business was there, he demerged, he cut off a small part and gave it to one son to run it. Now, everyone, there are two businesses which are there. Whenever a small part is cut off from a business, then government is going ahead and telling you can go ahead and transfer the credit in the asset ratio. It is not only for demerger. The next one over here is, people went ahead and told, sir, supposingly CGST, SGST and IGST, I have 10,000, 10,000 and 10,000, total credit supposingly 30,000. If I have to supposingly transfer to the demerged unit 50%, means I have to transfer 15,000, then sir, should I go ahead and say this 50% on each head, or I can go ahead and apply on the total amount? Then government went ahead and told each head wise you don't have to go ahead and do this. Do one thing, on the total GST which is there, apply the apportionment ratio. You got the amount, right? Now this 15,000, sir, from where should I transfer? Should I transfer from CGST, SGST or IGST? Government told whichever you like, that head say you can go ahead and transfer. Transfer 10 from here, 5 from here, no problem. Sir, transfer 10 from here, 5 from here, no problem. Transfer 10 from here, sir, 1 minute. 5 from here, 5 from here, 5 from here, however you wish, you can go ahead and transfer. That's what government is telling. Sir, apportionment ratio, please apply on the total unutilized amount, total amount pay, and not each head wise. And once, and you are at liberty, you can go ahead and transfer from any head, whichever you want. It says transferor is at liberty to determine the amount to be transferred from each head. Then people went ahead and asked, sir, if I have to go ahead, ITC to be transferred is equal to ITC balance with multiplied by ratio of asset. Correct, sir? Ratio of asset means how much is the asset transfer ratio? Sir, ITC balance pay, I have to apply. For an example, ITC balance is 1 lakh, asset transferred is 30%, then sir, 30,000 I'll have to credit has to be transferred. Now people went ahead and asked, this ITC balance, which day ka ITC balance has to be seen? So government went ahead and clarified, very simple. Government went ahead and told ITC balance on the date of filing of ITC 02, that day when you are filing ITC 02, whatever is the balance, multiplied by, sir, ratio of asset which date. So government went ahead and clarified, please take the appointment date of demerger. Appointment date of demerger पे whatever is the asset ratio of both the unit, that asset ratio you can go ahead and consider. So people went ahead and asked ITC balance which date ka? The date of filing GST ITC 02. Sir, ratio of asset which day? Which day? Then government told, sir, the day which is the appointment date of demerger, on that day, whatever is the asset ratio, on that you can go ahead and transfer the credit. Done, sir. Point is clear. Everyone over here. The next circular which is there is talking about free gift and sample. I have already spoken about it in supply ka chapter. Free gift and sample ka case mein, if free gift is a supply. I bought thermometers, took the ITC, gave thermometers for free. It is 71C may supply. ITC will be available. I went ahead and bought powder. Everyone, I went ahead and bought powder, made medicine, and I went ahead and supplied the medicine for free. It is not a supply under 71C. When it is not a supply, I will not get the ITC also. The first one is clear, I hope. It says free gift and sample if activity of distribution is supply ITC allowed, but if activity does not fall in supply 71C may it is not falling, then no ITC with respect to input services and capital goods to the extent of such distribution. The next one over here is buy one get one, or sir buy more save more discount may. Always remember buy one get one is nothing other than two supplied at the price of one, and government went ahead and clarified that buy one get one or give buy more get more discount, all these schemes may always ITC on input services and capital goods will be allowed. The last one over here is circular with respect to original equipment manufacturer and component manufacturer. Let's understand, there is one original equipment manufacturer, he makes the original equipment. There is one component manufacturer who makes the component and gives it to the original equipment manufacturer. Now they had one agreement over here where the component manufacturer has to make one component and give it to the original equipment manufacturer. Okay, component manufacturer told, sir, okay, I will buy the mold from the market, I will go ahead and make the item and give it to you, and per component, I will go ahead and charge you 100 rupees. Okay, sir. Now, value of supply would have been 100. Now, you know what happened? He could not find the mold in the market, and he told me, sir, I am not able to find the mold in the market. I went to the market, I bought the mold and gave it to him free of cost. For an example, the value of the mold, I will go ahead and say 1 lakh rupees over here. Okay, and he is going to make 10,000 units and give it to me. Now, and when I bought the mold and gave it to him, I will tell, hey, component manufacturer, that was your job to buy the mold. I bought the mold and gave it to you. Listen, I bought the mold and gave it to you. Now you can't charge me 100 rupees. Definitely he will go ahead and charge you something less because you gave him the mold now. See, the price was decided wherein he will buy the mold. But because I am giving the mold, definitely it's obligation of the supplier of the component made by the recipient, and hence everyone over here listen to me very carefully. Government is telling Ramesh, first of all, you bought the mold and gave it to him free of cost. Buying the mold was none of your business. It was not in the course of your business, and hence ITC we will go ahead and not give it to you. ITC you will have to go ahead and reverse. I hope everyone is clear with this point. Secondly, mold is supposedly 1 lakh rupees, 10,000 component is to be made, then government is selling 1 lakh rupees divided by 10,000 means 10 rupees, and hence this 90 rupees ka component with the front party is supplying, he will have to go ahead and add 10 rupees and his value of supply will be 100 rupees on which GST will be payable by the component manufacturer. Always remember one thing. Number one, if mold was his responsibility, but I went ahead. Everyone listen to me very carefully. If mold was his responsibility, but I went ahead and bought the mold and gave it to him, it's none of my business. ITC have to go ahead and reverse. Secondly, I gave the mold to him free of cost. Whatever is the value of the mold divided by the component, whatever amount comes, that has to be added to the value of supply of the component manufacturer. I hope this point is clear to all. Quickly give me a heads up. Are we all 100% clear? Yes, sir, we all got it. Let's go ahead. Everyone over here now. The next one over here is original equipment manufacturer, and we have component manufacturer. Now, original equipment manufacturer went ahead and told, I will buy the mold. I will go ahead and give it to you. Free of cost only I will give it. But you have to make the component and give it to me. Now the component manufacturer went ahead and told, okay, I will go ahead and charge you per component. For an example, he went ahead and charged me 100 rupees. Listen to me very carefully, everyone. I went ahead and bought the mold. I gave it to him. I told, okay, I will buy the mold. I will give it to you. You make the component and give it to me. In this scenario, it was my business. It was in the course of my business to buy the mold, and I will be able to take the ITC also. Plus, the mold which I have given free of cost, that mold ka any amortized amount will not be added to the value also. If he is charging 80 for the component, or he is charging 90, or he is charging 100, whatever it is, value में nothing will be added, because it was my obligation only, my business only, and I'll be able to take ITC also, and component का value में nothing will be added. I hope everyone is 100% clear with this point. Yes, sir, we got it. The same thing has been written over here. It is talking about the mold and dies wala circular. I'll close my discussion on section number 18 over here. Point is clear. Most of the people who watch our channel, more than 50% of the people are unsubscribed people. I request all the people who are watching these videos to kindly subscribe to the channel. If you are watching our classes, please subscribe to our channel and also hit the like button. Everyone over here now. Everyone over here, listen. This ITC का chapter में one small point. This chart is in this chapter. If I go ahead and tell, okay, I'll tell you one thing, everyone. I've gone ahead and covered all the amendments also. This is relating to a block credit. I've already told you. That's it, everyone. I've already gone ahead and covered all the amendments when I was teaching you input tax credit ka chapter. Remember, this is an A plus graded chapter, and this chart is A plus plus. Section number 16. One question from my point of view should come in the exam. Okay. Section number 17, this you can call it, sir, A graded, B graded, you can call it. Okay, everyone. But, sir, this chart, please do it. I can still say A or B, whatever you say, a small question can come. Okay, you call it A or you call it B, small question they can go ahead and ask. But this is 100% A graded chart. You must go ahead and do it properly. Done, sir. After this, we have the last one over here. The last chart from this chapter point of view, you can still call it C graded, because section number 16 and 17 are the most important. This is the last one, right, everyone? But anything and everything can come from the chapter. I have gone ahead and covered all the circular. I have gone ahead and covered all the amendments also when I have gone ahead and taught you this chapter, right, everyone? I'll close my discussion on input tax credit. Congratulations, people. Done.